Hi, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. With us, a favorite guest. Haven't had him on for a while, Peter Schiff of Euro Pacific Precious Metals. Peter Schiff, thank you for joining us today.
Good to be on again.
Well, I want to talk to you about all these reports, whether it's the LBMA or GLD, SLV, COMEX, JP Morgan vaults. Gold and silver, physical gold and silver, are being extracted out of the system at a breakneck pace. What is your take on all this scramble by big money to get their hands on gold and silver in the physical form?
Well, because the price went down. I mean, that's the natural reaction. You know what happens when there's a sale? People go and buy stuff, right? That's why merchants have sales. They want to attract demand. And I think the reduction in the price of gold has brought on a big increase in demand for physical gold. Now, where did all the supply come from? It came from the speculators, the momentum players who got all levered up, who started buying gold just recently in the last year or two. They didn't really understand the fundamentals. I mean, they just wanted to jump on a moving train, make some quick money. But the minute the situation appeared to have turned, they quickly tried to exit at the same time. And so that drove the price down. But that created the opportunity for real physical buyers to back up the truck and buy more gold and silver at more favorable prices. And also, I think there was a lot of short sellers that came into the market, and that also drove the price down. But remember, the short sellers have to borrow the gold and silver before they can sell it. But, you know, I think this is really setting up for a huge reversal, because once the technicals turn around and the momentum goes back to the upside in gold, and a lot of the speculators who sold on the way down want to buy back on the way up, there's going to be a big problem, because the gold they sold on the way down isn't going to be available on the way up, because the people who own it aren't going to sell it at any price, because they didn't buy it to trade out of it. They bought it to own it, to keep it. So this is going to be a big problem for the shorts and even people who want to reestablish longs, because I think most of the people that want to get back into the market are going to get back in a lot higher than where it was when they got out.
Well, people like Eric Sprott and Jim Sinclair. Jim Sinclair says this is going to trade well over $3,500 an ounce. He didn't say a price target. He says without question. He's his acronym is Mr. Gold. Eric Sprott, who runs his $8 billion fund up there at Sprott Asset Management, says, where are they getting the gold? They're running on fumes. Could we come up to a point where there is a force majeure, sorry, we cannot or will not deliver you gold? And A, can we get to that point? And B, what happens if we get to that point? And people like Sprott and Sinclair, and maybe you as well, say that day's coming.
Well, it could come, and it depends. It might be something that happens on the futures exchanges. Maybe some of the people that own futures contracts decide that they want to take delivery, and the other side of that contract, the short seller, can't get the gold or the silver to deliver because it's not there, and the price goes up and they don't have the money. They default on their contracts. You've got now governments trying to reclaim their silver. Germany asking for the United States to return its silver.
It's silver and gold?
Yeah, well, I think it was just gold. I don't think we're storing any silver for most governments don't have silver. They just have gold. But
Germany's gold. You said silver. But
yeah. Oh, I meant gold.
Okay.
Individuals are going to have gold and silver. I got silver on my mind because we just came out with a new special report, the powerful case for investing in silver. Yeah, your listeners or viewers can download it for free at schiffsilver.com. In fact, we're just announcing a brand new product, the Euro Pacific Silver Barter Bag, which I think is great for people to buy. I think it's a better way to buy silver for transactions than to buy junk silver, because you get a better price, you don't pay as big a premium, and they're nicer coins. They're brand new, and each coin that we're selling is exactly 1/2 ounce of silver, so you know exactly what you got there. But yeah, I think it's going to be difficult. I think the prices are going to go up very rapidly when they finally turn. People are going to be surprised and shell-shocked, really, by how rapidly gold and silver go up. In fact, some people might be afraid to buy because they're going to be looking for a pullback, and, we might not get one. And so people might end up paying much higher prices to get gold and silver than they were hoping.
Well, I know you've caught a lot of grief, and I'm not here to give you any grief because, the prices, people who bought it $1,600 or $1,700 or $1,800 should not. This should not be a trade. This should be a core asset. Is this similar to what happened in '74? When went off the gold standard in 71, so it goes up to almost $200 an ounce in late 74. But in 75, it goes down to almost $100 an ounce, about $103 an ounce. And then it took from 75 to the middle of 78 before it came back to $200, and then, off to the races from there. It's $850. Is this a similar time frame?
Well, I think so. I mean, although I've experienced this for the last 12 years, gold didn't go from 260 to 1900 in a straight line. There were plenty of periods of time where it pulled back a bit. And whenever that happened, people were always coming out of the woodwork saying, well, if you'd have listened to Schiff, you'd be down 10%, you'd be down 20%. Well, they always pick and choose their time periods. If you'd have listened to me in the beginning, you'd be way up. But I have always told people, certainly when gold is making new highs, I've said, look, buy some, but be cautious. Don't buy it all. Have some dry powder. Wait for the pullbacks. And whenever we get a pullback, that's when I say, okay, now come into the market. And this has been a big pullback. This is the time, to load the boat, back up the truck. If you're going to wait until we hit 2,000, well, then I'm probably going to say, look, if you haven't bought any gold yet, okay, don't put it all in at 2,000. Buy some. Maybe we'll get a pullback. I don't know. But I'm trying to own gold for the long term. I'm trying to take advantage of any buybacks. The people who are always making fun of me every time there's a pullback are the ones that never bought gold in the first place. And even though it's pulled back, it's still a lot higher than it was when they first started laughing at me for buying gold. Meanwhile, it's very, there's a lot of hypocrisy here because stocks are far more volatile than gold. Yet, if a stock goes from 20 down to 17, they're not, oh my God, how could you have told people to buy this stock at 20 and now it's at 17? Oh, this is, people are willing to accept that stock prices can fluctuate, and they'll say, well, you can buy for the long term, hold on, don't worry about it. But somehow when it comes to gold and silver, they toss all that out the window, and if it ever goes down, aha, you were wrong, you shouldn't have recommended it.
Aren't we getting close to what mining costs, at least on the fringes, at gold at 13 and change and silver around 20? I hear a lot of reports that we're talking about some mines can't make money at this level. That just not enough price to make money and make a profit.
And that shows you just how much inflation there has been. The government claims there's no inflation. Well, then how come gold companies can't mine gold at $1,300 an ounce? They can't do it profitably because their costs have gone up. Well, how has that happened in a world of no inflation? Well, it has happened in a world where there's a lot of inflation. We just don't acknowledge it. And in a way, gold is a victim of that inflation instead of being a beneficiary because we have the inflation, but people don't perceive that it's there. And so the price of gold barely keeps up with the cost of mining it. I think when people look beneath the government propaganda and really come to terms, not only with how bad the inflation problem already is, but how much worse it's going to get, gold is going to trade at a big premium to the cost of mining it. But of course, you have to have the mine. Not that many people have a gold mine, and a lot of the gold mines are going to be shut down. And there's not a lot of money being invested in exploration and development right now. Gold companies are canceling their CapEx because they too believe that the price of gold might be here for an extended period of time. So they are hunkering down, right? They're preparing for that. But I think they're wrong. But also I think when gold prices surprise everybody and have a big run, I don't think those gold companies are going to say, okay, we're going to bring all that back online. We're going to bring these budgets back. We're going to open up these mines. They're not going to make a snap judgment because they're worried, oh, what if it goes right back down? I think the gold stocks are going to have to wait for gold to be well above the old highs before they make any new plans. And therefore, I think most of the mining is going to take place on Wall Street in the stock markets. I don't think gold companies are going to be investing for exploration and development. They'll be using all their extra cash flow from selling gold at a higher price to buy back their shares that are below book value, maybe to buy back the shares or take over other companies. It's cheaper to mine for gold on the stock markets than it is, in reality. So I think there'll be a lot of consolidation, a lot of stock buybacks. This is going to be bullish. I think right now you've got the best buying opportunity of the entire bull market in gold mining stocks, gold and silver stocks. That's why for the first time ever, I just launched on Friday of last week my first gold mutual fund, the Euro Pacific Gold Fund, invests almost entirely in gold and silver mining companies. I started my mutual fund company about 3 years ago. But at the time, gold stocks were near their highs. They had a big run. So from a timing perspective, I didn't want to come out with a fund right after a big run. I wanted to wait for a decent pullback so we can start the fund at a relatively low point and then have a nice track record. You know, most people in the financial industry, when they launch a fund, they want to sell what's hot because it's easy, right? It would have been easy for me to launch a gold fund 3 years ago because everybody wanted to buy gold stocks. But now is a better time as an investor. It might be a harder sell because everybody hates gold stocks right now, but that's when you buy them cheap, when everybody hates it. But I'm willing to spend the time educating people so that they know what they should do, right? I don't want to try to sell people what I think they want. I want to educate people and convince them to buy what I know they need. And so it might be a harder sell, but this is a great time, I think, to be investing. You know, they say on Wall Street, it's easy to make money. All you got to do is buy low and sell high. Well, it's easier said than done because you can't sell high until you buy low. And I'm convinced we are buying really low right now by buying the mining stocks. And so, you know, people can buy them themselves, or they can check out some information on my brand new mutual fund that came out on Friday. You know, the ticker symbol on that fund is EPGFX, I think. I think that's it. But again, you know, read the prospectus. It's risky. You can lose your money, all that stuff. So only invest if you can afford to lose money, and don't invest any money unless you read that prospectus.
Well, people can also buy physical gold and silver from you as well if they, you know, if that isn't their appetite. They can just buy physical from you. And one last question.
Yeah.
Bernanke's on his way out. He actually should be. 1 minute he's saying we're going to taper as a trial balloon. Market crashes. Then all the King's men come out, and Bernanke in the last 6 weeks or so, no, we're not going to taper. The replacement is Janet Yellen or Larry Summers. I think it's going to be Janet Yellen. That's why you want to bring it. Summers.
I mean,
either way, Yellen or Summers. Are we going to have a halt to the money printing?
No, we're not. I mean, think about that. Those are our only choices, right? Tweedledee or Tweedledum. I mean, the lesser of two evils, right? I think. I mean, look, it's hard to say this. So maybe I'll say it this way. I think Yellen is a worse choice than Summers. As much as I don't like Summers, Yellen's even worse. And that's why I think that Obama will go with Yellen. And, so from a gold perspective, a gold bug, that's the best thing that could happen, right? If you just want the price of gold to go as high as possible, and you don't really care about, what happens to your country, if it's solely based on which Fed chairman is the most bullish for gold and silver, I would say that would be Janet Yellen. I'm not rooting for her for that reason. I'd prefer to have a good Fed chairman, but that's not going to happen. But I don't even think we're going to have a not quite as bad Fed chairman. I think we're going to get the worst possible Fed chairman because, the president has yet to disappoint me. He always does the worst possible thing. And so I'm sure that he's going to continue with that track record, and Yellen will get the nod. But even if it's not Yellen, even if it's Summers or some other person that they pull out at the ninth hour, they're going to keep on printing because that's all they can do. And nobody's got the integrity to come out and tell the truth that the Fed's policies have been wrong, that they haven't solved the problems, they've made them worse, that now it's time to face the music, to swallow the medicine, it's going to taste bad. They're never going to say that. It's going to be one lie after another. They're going to keep on printing until we have a monetary crisis, right? A currency crisis, a sovereign debt crisis, and that is the most bullish environment for gold. All I can say is don't wait for this crisis, right? Don't wait for the crisis to buy because you're not going to like the prices. You got to buy now, before the crisis, when nobody wants gold. Because believe me, during the crisis, everybody's going to want it. The trick is to find somebody to sell it to you.
And you are predicting another crisis for sure. When?
Worse than the last one. I mean, the last one was the warm-up. The main event is coming. In fact, the '08 crisis is what started the dominoes falling. That's what laid the foundation for the greater crisis that's coming. Because everything that we did to postpone the consequences of that crisis is what has led to, or what is leading to, the coming crisis, when those consequences can no longer be postponed and all the problems have been exacerbated. So now the consequences will be much worse than had we dealt with them back in '08, because we didn't deal with them, because we postponed them, and in the process increase the severity of the problems, the crisis is going to be that much worse, which means it's that much more important now that you be prepared for it.
When do you think the timing on that is? Some people say by this winter, Paul Craig Roberts, former Assistant Treasury Secretary, this winter we'll be in a full-blown, another deep downturn. What do you say?
Look, it's hard to say because you put a date on it, and then if it doesn't happen by that day, oh, you see, you were wrong. You don't know what you're talking about. I don't know. I would be surprised if President Obama finished this term without this crisis hitting. Is it possible? Yeah. Do I want to bet on it? No. But my position is, proceed as if the crisis is tomorrow and just make sure you're prepared. Because, you got to do it early. And even if you're a year early or you're 2 years early or you're 5 years early, right? Obviously, people prepared for it a few years ago, but it's better to be 5 years early than 1 day late. Because if you're 1 day late, you're too late. You can't do anything about it. So prepare yourself in advance, and then you can sleep well at night instead of worrying, oh, my God, I'm not prepared. What if it happens tomorrow? Just hope for the best, plan for the worst. But the reality is, the sooner we have the crisis, the better it is for the country. Because the further into the future we're able to postpone it, the worse we make it. So I'd rather have a bad crisis now than a worse crisis later.
Peter Schiff, CEO of Euro Pacific Precious Metals, thank you for joining us today on USAWatchdog.com.
Thanks for having me on again.